Okay, I'm a little bit impatient. I'll start now. So welcome to the investment webinar hosted by Gabriel Trading. I want to thank everybody for coming. We have a pretty short agenda here because like I said, we're going to keep things very high level. And what I really want to talk about and what I love to emphasize is what's the difference between stocks, options, Forex. So we're going to touch on that a little bit. We're going to talk about how do I make money. Let's keep it real basic, real high level. Some people don't understand how stocks work. They don't understand how the exchange of different securities and different equities work. How do we make money off of it? How is this a scam? You know what I'm saying? What do I need to go to school for this? How does it work? Can I take the money out immediately? Is it taxed? You know, those are some of the questions that I get. So I hope that I could clear up some of that, and I'll keep things, like I said, I'll keep things as simple as possible. I'll try not to go too deeply into terminology, try not to go too deeply into, you know, things that I don't want to say it doesn't matter, but things that you don't actually need to start the process. And how do I set up a trade? And that's that live trade that I'm going to be showing you. I'm going to be basically walking you through so you can see exactly how I see what I see in that case. So trading in the simplest form, let's keep things real simple. Let's keep things real basic. Trading is basically you're buying something that's undervalued, right? You're buying something that you feel in the near future is going to go up, it's going to raise in price. Because at the end of the day, on the highest level, trading is simply buying and selling. Let's not overcomplicate it, right? The example that I always tell people between these different securities, equities, whatever you may be trading, it's a preference on what you want to trade, right? If I want to sell apples, I'll sell apples, right? If my friend next door wants to sell oranges, they can sell oranges. So when people say Forex, options, at the end of the day, the concept is the same. The concept does not differ. You're still buying and selling. What you choose to buy or sell is up to you, right? If you want to buy and sell currencies, then trade Forex. If you want to buy and sell shares, equity, and stock, then trade stock, right? If you want to trade contracts or contract premiums, you trade options. Then there's futures, then there's bonds. There's so many different financial instruments in which you can trade. You're not limited to anything, right? You don't necessarily have to, like, if someone tries to tell you one is easier than the other, they obviously don't know what they're doing, right? If someone tries to tell you one makes more money than the other, they obviously don't know what they're doing. It's literally comparing apples to different color apples, and you'll see that later on. So trading in the simplest form is just buying things that are undervalued and waiting for some time for that undervalued asset or security to basically grow in value so you can sell it, right? Buy low, sell high. And then it's the same concept the other way around. You're selling something when it's overvalued and you're thinking to yourself, okay, this is way overvalued right now. I have so many different people paying ridiculous prices for this, but maybe because the demand is up and the supply is low, right? And eventually that's going to change. So I'm going to sell this at this time, make the highest amount of profit that I can at this point in time, and then move on to my next trade, move on to my next purchase, procurement, whatever it may be. So what causes something to be overvalued or undervalued? Two main things. You have supply and demand, and you have intrinsic value. Now, like I said, I'm going to keep these very high level and very simple to understand. Supply and demand is one of the biggest factors in which pushes price, right? You can buy a gallon of milk for $12 when milk is hard to come by, right? But at the same time, you can buy milk for 50 cents. If there's a surplus and there's more supply than demand. So understanding the psychology of trading, understanding the psychology of the market, understanding that at times people want more of one thing than at other times. So for example, wintertime, right? You would get more warm clothing. You would get more coats. You would get more sweats. And you would get these clothing articles for cheaper prices. Why? Not because they just decide, hey, we feel like selling our coats and our jackets at a cheaper or more expensive price. It's because of the season. It's because of the time in which these items are being sold. It's causing a change in the supply and demand. Now, stocks, equities, Forex, they work the same way, right? There's certain points in time where stock is more valued than it is at a different point in time. Why? That stock, they may have great products coming out. They may be highly profitable. They may be all over the news. Everyone wants to hear about them. Everyone wants to see, everyone wants to know what's going on. So now they think, right now, this is hot shit. This is what I want. This is where I want to be. Great example, cryptocurrency, right? Last year, we seen Bitcoin hit $20,000 a coin. Why? Because of the hype. It was all part of the psychology, right? Everyone wanted to hop on the wave because they said, whoa, this went from around a couple $100s in the beginning of the year to now thousands, to now we're in the 10,000 range, to now we're heading up to 20,000. This may not stop, right? This is a bubble that's growing and growing and growing. Two things cause that, right? Well, I should say three, but the basic two will be supply and demand and intrinsic value. Intrinsic value is basically the personal value in which one person puts onto an item. What is a person willing to pay for that item, right? I see a bottle of water right now sitting in New York City. I'm in Brooklyn, New York as we speak. A bottle of water, that's cool. I think I'll probably pay $1.50 for it. But let me ask you a question. How much would you pay for that same bottle of water if you were in the desert, right? If you were in Vegas right now, it's 120 degrees outside. How much would you pay for that bottle of water, right? You may not be willing to pay $20 a bottle. That's a little bit outlandish. But you may be willing to pay $5 a bottle. You may be willing to pay $6 a bottle. It works the same exact way in stock. So when Bitcoin started rising, right, despite it not having any real backing, any real substantial value, because no one knows any history or no one knows where it came from, right? People decided that it was actually worth $20,000 a coin. And that hype, that demand basically boosted that cryptocurrency price through the roof. And to make things even worse, the supply was low. It was nearly no supply at all. So people are sitting there trying to figure out the value of this coin while it's going through the roof. And now people are buying until what happened? Sadly, the bubble popped, right? Then Bitcoin started dropping to a low of about $5,000 to where it was once 20. Now I could tell you probably it would get back there. I wouldn't say Bitcoin can. It has the potential to do so. I mean, talking from a trading stock standpoint, everything is in line for a retest. If it was once there, it could reach there again, right? It could reach to those points again. And that's what makes Bitcoin such a special, phenomenal case, that it's reached points where you shouldn't be surprised if it reaches 20,000 again, because that's just simply its previous all-time high. So moving on. As I was explaining earlier, the difference between stock, options, and Forex, not much. The terminology maybe. What we use to basically call a stock, we trade it by share price, or how much we deem the equity or the stock or the share to be valued. An option is a premium, so it's a contract price. How much are we willing to pay for a contract? Forex is a currency quote. How much are we willing to pay, or what is the value between the US dollar and the euro, right? What is the quote difference? To every US dollar, how much euro can I receive? So I don't want to say they're exactly the same, but I would consider them different color apples, because at the end of the day, the concept is the same, right? We're all trying to do the same thing. We're just trying to buy all these securities at a reasonable price and sell them for more. Simple, right? So trying to overcomplicate things and wrap your head around, oh, you know, I'm a Forex trader, you know, this and that, this and that. Once you understand the overall concept, once you understand the overall psychology of the market, once you know what pushes price, once you understand why a price moves, then in that case, you will understand how to trade. And I promise you, I kid you not, I can teach you Forex. The way I teach you Forex, you'll be able to trade stock. You'll be able to trade futures. You'll be able to trade options. The only difference that you'll have to apply is you'll have to learn how to speak the language. You would have to learn the different terminologies. And guys, I will allow everyone to have questions. So don't worry. Please hold on to your questions. And then we'll have a full conversation about it after. I just want to get this information through within the 30 minutes, and then we could chop up whatever you want to speak about after that. Now, breaking it down by stocks, also known as shares. This is basically trading parts of a company. So the reason why I like stock, and I'll explain the reason why I went from Forex to stock, was the difference is literally between macro and micro, right? Forex is the largest market. It is a global market. And what comes with the global market comes global factors. I always say control what you can control. Stock is micro. Why? Because there's specific things that affect one company. But when it comes to a global currency, there is many things, including stock, including industries, including politics, including economics, that affect a currency's movement. So for someone to come into trading brand new and trade Forex, that's actually, to be honest with you, that's actually a bigger feat. It's actually slightly more difficult to fathom, to understand Forex than any other equity, any other security, simply because of the factors that go into it. Like I said, control what you can control, right? If I understand a stock, for example, Apple, if I'm learning the behavior of Apple, I use Apple products. Right now, I'm hosting this webinar on a Mac. I have an iPhone. You know what I'm saying? I have an iPad. I have an Apple Watch. So how I feel towards Apple, how I feel towards the company reflects exactly what an investor thinks. And what investors think is what we call investors' sentiment. Investor sentiment is basically our emotions, our feelings towards a stock that pushes our logical notion. So why do we invest in Apple? Why, right? Because we know how much people love the products. We know, quote unquote, how reliable those products, how simple they are to use, the sleek design. We know what we love about Apple products, right? So that same love for Apple products is translated. The investors know why we love Apple products. So if I know the wide majority loves Apple products, right? I'm going to invest in Apple because I know Apple has a large potential to grow. I know Apple is reliable. I know Apple, the stock is not going to go to zero, right? So if I'm a long-term investor and something happens to basically give us a pullback on Apple. And a pullback is basically when the stock goes the opposite direction that it's currently going. Let's say Apple right now is bullish, meaning that it's going up, it's rising in price, it's increasing in price. A pullback would be a bearish move. So like, let's say we get a little bit of selling power and Apple goes from, let's say $100 a share to $99 a share, right? That's a pullback. So when you know that Apple is used to being around $150 a share, $170 a share, $200 a share, if by chance you see Apple all the way down at $100 a share, you know, oh my God, this is a sale, right? Apple is on sale. So I'm gonna buy some Apple shares knowing from fundamental analysis or even technical analysis, you know from both, more technical because you're looking back into the past price action, price data. You know for a fact that, whoa, Apple has never been at these levels in the past 3 to 5 years. Why is it at 100 now? I'm gonna buy. Let me buy, right? Because I know for a fact this is an unusual level for Apple, and I know that it's gonna return back to the 150 level, back to the 160 level, back to the 200 level, right? So these are the kind of thoughts you have to have in mind. Trading is not that complicated. It's just a little bit of due diligence and a lot of patience, right? You have to have patience to sit there, do your analysis, understand what a market is, understand what a market could be, and understand where the market won't go. Once you know those 3 factors, it'll be hard for you to lose, right? Options. Now, option contracts is basically agreements. The way I explain it to people, think about a rain check, right? Imagine you go to Key Food and you know that milk is on sale for 50 cents and milk is usually $1, right? You get to Key Food and you're like, listen, I want 5 gallons of milk for 50 cents because it's on sale. And then the cashier says to you, well, we ran out of milk, right? It came a little bit too late. Everybody came, bought out all the milk. And you're like, all right, that's cool and all, but I still want to buy my gallons of milk for 50 cents a pop, right? So what that supermarket is going to do, they're going to give you a rain check. They're going to ask you, how many gallons of milk do you want to buy, right? And basically give you a date, an expiration date. So you basically have an agreement with the supermarket to basically buy 5 gallons of milk for 50 cents by this expiration date. That's exactly what a contract is, an option contract is. I am buying the right to purchase an underlying stock or a specific stock at a certain price within a certain period of time. So if Apple is trading at $100 and I think Apple is going to go up to 105, let's say I buy what we would call a call option. I'm buying the right to buy the stock once it hits a higher price at that underlying strike price in which I selected. It may get a little bit complicated because of the terminology, but just think about it simply that I am purchasing something at a specific price later on in the future while it's at a different price or at a higher price, preferably. So Apple is now trading at $200. I had an option contract saying at a strike price of $100, and I basically execute my right to basically fulfill that contract. And I end up buying 5 gallons of milk for 50 cents when the sale is over and now milk has gone back to the price of $1, right? Now, Forex. Forex, also known as the foreign exchange market. This is where people trade currencies, right? As we all know, each currency has a different value when put against another. So currently, the euro is more powerful than the US dollar. In another sense, the US dollar is more powerful than JPY. Japanese. So in that sense, you basically have people buying and selling currencies between those different price differences. Basically, the foreign exchange market is exactly that. It's the exchange of different currencies. So if I know for a fact that the euro is now trading at $1.55 to the US dollar. So every US dollar, I get $1.55 euro. My mindset is to basically trade that currency pair when it comes closer to the price of $1, right? So if I know the euro is usually stronger than the US dollar, right? As it gets pulled closer to the point where a US dollar to a euro is basically 1-to-1, I know for a fact I'm getting that euro for a cheaper price. So my job is basically to find those critical points. And that's exactly what we're going to see in our example later on. So don't worry, I'm going to explain that in full, exactly how I find those critical levels, exactly how you set your mind in a way to basically process whether something is overvalued or undervalued. Now, how do I profit, right? Plain and simple. How do we make money off of trading? That's all we care about, right? We don't trade for fun. We don't sit here and it's like, oh yeah, I like losing money. I like making money. No, we trade because we want to make money, right? Because to be honest, this shit is stressful. This is stressful. It's a lot of stress. So you have to learn how to control your emotions. You have to learn how to do things the right way and just get in and get out. Make your money, call it a day, go back to sleep. That's the point. That's what I love it for. And let's explain exactly using stock and using Forex. How exactly do I make money, right? So if I'm looking at Apple shares and Apple is currently trading at $100 per share, I buy 10 Apple shares. So that means I would need basically roughly $1,000 in my account because it's $100 per share, 10 shares, 10 times 100, $1,000, right? So I spend $1,000 and I buy 10 shares of Apple. Then Apple goes up to $102.50 per share. And I said, you know what? I've had enough. It's cool. I'll take my profit. You know, I'm fine with, you know, the profit that I just made. I'm going to sell my 10 shares now at a price of $102.50, whereas I bought it for $100, right? So then my profit per share is $2.50. Now, since I had 10 shares, that would be 10 shares times $2.50. So in that one transaction, I've made $25, right? So in the simplest fashion, that's exactly how trading works, right? I buy literally, I'm not talking about an apple, let's say oranges, so I don't confuse you guys. I buy one orange for $1. I go sell that orange for $2 down the block. I've made $1 because I spent $1 to buy the orange and I sold it for $2. So I made $1. I go back to my orange plug, right? And let's take it up a notch. I buy 10,000 apples. Sorry, I mean 10,000 oranges. We're not buying apples. We don't like those. I buy 10,000 oranges for $1. I go back to my same guy and I sell him all 10,000 oranges. I keep saying apples for $2. I made $10,000. That's exactly how stock works, right? So your job is not only trying to figure out something that is worth $1 that you know can get to $2, right? But your job is also position management, right? How much are you willing to buy? And this is what I explain to people all the time. You see somebody making $100 a day, right? Don't think that's small money. Because the point is not about the money that you make. It doesn't matter about the money that you make. The point is winning. The point is winning, coming out of every trade where your trade worked out, where you were able to buy for less and sell for more, Why? Because if that person is making $100, I promise you, all they have to do is buy more oranges, right? I just showed you a scenario where I made $1, and I showed you the same exact scenario selling the same exact product where I made $10,000. The only difference was my position size. So in trading, there's three things you have to worry about: psychology and emotion. So I'll loop those together: psychology and emotion. You have to know how to control yourself, control your discipline, stay to your rules, stay to your principles, right? Two, you have to know how to control your emotions, right? Don't get stirred up when you're up 1,000. Don't get stirred up when you're up 2,000. Stay to the plan. If you drew a plan, you knew exactly what you was gonna do, you execute, right? Because as soon as you allow emotions to get intact, you lose control. Once you lose control, you lose the play. Then the play starts going against you. You don't know how to manage the play. You say to yourself, all right, I'm up 1,000. Let me see if I can make 1,100. All right, it goes back down to 900. Then you're like, all right, cool. Once it go back to 1,000, I'm gonna take my money and go. It goes back down to 800. And you're like, oh shit, all right. Once it goes back to 900, I'm good. It goes down to 500. Once you get emotional, you lose. So understanding your rules, your principles, your emotions. Step one. Step two, technical analysis. Educate yourself. Learn how to read these charts. Once you read these charts, then you're able to basically plan and execute. Once you're able to plan, right, you're able to tell yourself, all right, this is where I'm gonna enter, and this is where I'm gonna exit. Once you have that plan, you already know how much money you're gonna make. You already know what you're gonna pay for that specific security. You already know what you're gonna exit and how much profit you're gonna make. And then you already know what you're gonna eat on Friday, because you're already planning that $2,000 that you just made on what dinner or what restaurant that you wanna go to. What kind of steak, what kind of cut, what kind of medium rare you want it, right? Planning, understanding exactly how you're getting into the situation. And that goes for everything, just not about trading. That goes for business and entrepreneurship in a totality, right? You have to plan, then execute. But in order to plan, you have to educate yourself. So emotions, psychology, technical analysis, right? And risk management. What are you willing to lose? How much are you willing to lose, right? If this goes against you, the money that you lose, is that rent money? Is that bill money? Or is that just disposable cash that you can lose and still sleep good at night? That's what you have to take into consideration. Psychology, technical analysis, educate yourself, risk management. How much money can I lose? How much money am I willing to lose? Our Forex example, right? This one's a little bit more complicated. You have to understand what a lot is, how much pips are, but it's just the terminology of Forex. It's just like saying how much per share, how much movement per currency, or how much movement per currency quote. What is the difference between Euro USD and the US dollar, right? So understand our example here. Euro USD is currently trading at 1.5555. You buy one lot. One lot is equivalent to the buying power of $100,000. So let's say you're purchasing $100,000 of a certain currency pair. That's what buying one lot is. And then one pip is the 0.0001 movement of any currency pair. So for example, we say Euro USD is currently at 1.5555. If it moved up one pip, it would move to 1.5556, right? So our example here, we bought one lot while it was at 1.5555, and then it went up 5 pips. So 5 pips would put the currency pair now at 1.5560. How much money did I make? So basically, the way you would calculate it is you would multiply the amount of lots in which you purchased times the amount of pips in which the currency quote moved. So if it only moved 5 pips, I'm multiplying 5 pips, which is 0.0005, times the amount of lots I had, which is 1 lot, which is equivalent to $100,000 in currency, which is $100,000 times 0.0005. Then that means you made $50 on that play. So moving on, let's get into the charts, right? So I'm gonna exit out the PowerPoint. Let's make this smaller. And then we're gonna get into TD Ameritrade. This is the our favorite part, right? How do we make the money? How do we make the money? So this is basically something that I was looking at. Like I said, I don't trade Forex anymore, but it's all the same, right? The skills never leave you because you're applying the same psychological concepts to everything. Right now, I'm looking at the USD JPY. So the US dollar to the Japanese yen. Currently, it is trading at 105.628. So what I've seen, because of the currency, because of the currency war, because of the trade war, because of Brexit, because of all these economic global factors, global events going on, you basically have a lot of extreme movement. What do I mean about extreme movement? You basically have currency pairs breaking through strong psychological levels. What I consider psychological levels is what we call support and resistance. This is one of the most important factors of trading. If you can master support and resistance, you are a trader, period. Why? Because one, I don't want to say this is one of the most simplest concepts, but this is one of the most fundamental concepts of trading, period. It doesn't matter what security. I don't care if you're trading futures, stocks, equities, Forex. I don't care what it is. Psychological levels, support and resistance is the most important concept of trading. You have to understand where a stock is willing to go and where a stock is not willing to go. If you don't know that, you won't be able to tell the direction, right? Trading is a psychological profitability game. Probability. Wow, I said profitability. Yes, we all know it's very profitable. Probability game, right? There is no 100% trade. If I knew how to make money 100% of the time, Lord knows I would not be wasting my time doing anything else. I would wake up out my bed, and before I brush my teeth, I'd make a quick $10,000 and go back to sleep, right? Wake up for brunch. Because that would just be the game. That would be how things are. But what I can tell you is you can take very high probability plays, very high probability positions. How do you find those positions? Now, like I said, I'm looking on the 3-year, 1-day chart. Each one of these candlesticks that you see represent one whole day, right? Now, the Forex market is the only market that is a 24/7 market. It is a market that is always open night and day. They are just simply different sessions. So this is always moving. It's always people trading this. It's always people watching these charts, apart from a small session on Sundays, I believe, where the market is actually closed for about 2 to 3 hours. But other than that, the Forex market is always open. Now, psychological levels, my support and resistance. What did I do here? What are all these colors? Aaron, this is confusing. Holy shit. What am I looking at here? Now, these levels are levels where I've seen this currency pair struggle to get past. These are levels where I see a lot of commotion. What do I mean by commotion? Let's start from the top bottom. Here is the 3-year high for this currency pair, 118.66. So I know for a fact that when the price is at this level, it's overvalued. It's either overvalued or it's looking to make new highs. So in identifying this level, right, the first thing I do, I identify the extreme low, the extreme high. So I know the extreme low is 99.537, extreme high is 118.66. In understanding that, you start to break it down into channels. The reason why these channels are important, because the stock market is man-made, right? It's pushed by emotions, it's pushed by how people feel, it's pushed by what people see on these charts, it's pushed by what people see going on with our politicians, our monetary policy, our economy, our industries. Based upon all of these different factors, we basically come to a conclusion and say, all right, I see what's going on. I don't think I want to be here when this happens. Or I think I do want to be here when it happens, right? Those are the thoughts that you always have to consider people are taking when trading. So now that I've found my high point, low point, time to break down into it. My next psychological resistance here is the 114.53 level. Why? Look at all these bounces that I see. 1 bounce, 2 bounce, 3 bounce, 4 bounce, 5 bounce, 6 bounce, 7 bounce, 8 bounce. This is in the last 3 years. So that means in the last 3 years, USD JPY has respected this one level 8 times. 8 times. So I know for a fact when we get up to this level, and that's exactly why I drew this. This is basically my room for error. So this is the negative zone where I think the currency pair is not willing to go. And this is my target profits, right? So matter of fact, I should take this from the bottom top instead so that you guys would understand better. So right now, because of everything that's going on, right, the US dollar is dropping in value. So right now, this is basically, actually, no, that was incorrect of me saying, sorry. The comparison is the US dollar to the JPY. So right now, we see a lot of commotion going on because of the trade war, because of all these high risk moves going on, that is basically pushing this currency pair all the way down to the brink. Now, it all depends on how people view this chart. If some platforms, some brokers read this JPY USD, so instead, this chart would literally be upside down. So this would be to the high side, and this bottom side would be to the low side. But right now, TD Ameritrade reads it USD JPY. They usually read it from the stronger currency to the less stronger currency in that sense. So now what I realize is the USD JPY is down to 105.82. That's extremely low, right? That's extremely, extremely low. So what I'm expecting is I'm expecting it to bounce off of this level. Why? Because look at this level right here. This 105.88 level is a strong psychological level. Look at in 2017. We've seen literally 4 bounces here. 1, 2, 3, 4. We've seen several bounces where this did not want to break this level. And when it did break this level, it came down to a low of 104 and then pulled back and then went upwards. Can you imagine if you got in around this 105 level and sat in this, let's see, for a month, 2 months, 2 months alone, you would have went from 105 to 111. To be honest with you, that's looking like almost, let's say roughly 5,000 pips. Yup. 4, 5. Yeah, that would have been a 5,000 pip move. So if we tack that into the example that we had in our slide, if I had one lot on 5,000 pips, that would be $100,000 times 5.0. Yeah, basically, yeah, times 5. Sheesh, that would have been a lot of money. But yeah, in that sense, that's exactly what you're looking for. You don't have to overcomplicate things. Now, once you get more advanced, you can trade between the levels, right? So you can trade, I mean, like I said, this is a daily chart. Each one of these candlesticks is 1 day. So you don't really have to be that advanced to basically hold one of these positions for a couple days. It's not really that complicated, but the point is to be able to identify these levels, right? Based upon the amount of times this specific currency pair respected that level. So now that I zoomed in, right, this right here is in the last 3 months. So this is August, July, June, May. So basically, if you caught this back in May, right, once it bounced off that 112 level and you shorted this position, you would have basically been able to take profit or ride this all the way down to the 107 level. That again is another 5,000 pips of profit. And these are plays that you literally have to put in once and be patient and just sit in the play. Let's see how long that would have taken. Like, yeah, that was about 2 months. So if you sat in this play for about 2 months, right, simply based upon this price action, you would have simply made 5,000 pips based upon your position. If you just had one lot, that would have been 100,000 times 5. Yeah, exactly, right? You do the math on that. You could basically quit your job. That's your yearly salary in 2 months. So in this sense, what we're looking for on Monday, or not even, sorry, the market is going to reopen on Sunday. Sunday after 6, what you want to look for, if you are trading Forex, right, look to see what it does at this level. Look to see if it comes all the way down to that 104.61 level, or if it starts to turn around. If it starts to reverse, right, then it's going to reverse all the way back to the 108 level. That's your first target profit. That's your first profit level. So if I were to manage this, I would get in, right, ride this all the way back to 108, take half my position off the table just so I could cover my initial investment, right? And then if it breaks this level, my next profit target is basically 112. So we're going from 108 to 112, right? Because look, this is the next area in which we've seen several bounces. We may see a little trouble probably around this level, this 110 level, right? Because we see a little commotion here. Sorry, I'm actually pointing at the screen like you guys could see me pointing. I apologize. So like, yeah, basically 1 touch, 2 touch, 3 touch, 4 touch. You may see a little trouble around this area, but once you break this area, you're clear as day all the way to this 112 level. That's my second profit target, right? Once I break that profit target, we're going all the way up to 114. So if this plan stays strong and we recover all the way back up to 114, whether it's by end of year or not, you literally went from 105 to 114. That's a 9,000 pip swing, right? Like I said, this is one trade. This is one position. Literally just staying, all it takes is patience and being willing to sit there and say to yourself, you know what? I've made a plan, let me execute. Now to manage that play, what you do is you set stop losses. This is where the risk management comes in. A stop loss is what us traders consider a Band-Aid. This is what stops the bleeding. If the trade goes against you, or if the trade reverses and you've already made profit and you've decided, you know what? If this stock drops below this level, I'm just gonna take my profit and go. I'm good. Wipe my hands clean, right? Then you can decide, all right, let me set this price level where your broker is automatically gonna take you out of the play and award you your profit at that point in which you wanna get out. We can talk more about these things, more about the smaller details, stop losses, take profits, psychological levels. But setting up this play, this is exactly my plan of action. This is exactly what I'm looking for. So come time Sunday, if I was trading Forex and I wanted to trade this, I would literally wait to see if I get a bounce off this 105.84 level. If this bounces upwards and it starts to reverse, I'm in the play, right? And as it goes up day by day, I'm managing my play. So I'm either taking profit off the table or I'm adding to my position. I'm buying more. Remember, the more oranges we buy, by the time we sell it, how big of a profit. So now as I'm sizing up this position, right, as I'm managing my position, the more that it goes up, the more money that I make. So I went from making $1 a pip to $10 a pip to $100 a pip to $1,000 a pip, right? So like I just told you, if I make 5,000 pips, right, and now I'm in a position that gives me $1,000 a pip, right? You do the math, right? It's really that simple. Don't overthink it. And these long-term moves, patience rewards you, because you have day traders that are in and out these moves. They make a lot of money as well. But at the same time, it's a lot more risk, because now you're talking about dialing down to a smaller time frame. This is me looking at the chart on a 5-minute scale. So each one of these bars represents 5 minutes. So if I'm looking at this, right, my decision-making skills have to be much faster. I gotta be able to do my technical analysis much quicker, because this price is moving every 5 minutes, right? And anything in which is moving faster, you need more time to look at the charts. So if you have more time to sit here and look at the charts, then probably that's for you. But if you're someone, you have a 9 to 5, and you just want to see growth in your account, you just want to look in your phone, you just want to wake up and see, all right, I'm up $5,000. I'll probably call out of work today, right? It all depends on what kind of trading you want to do. Swing traders, day traders. Swing traders put trades in, they let time pass, and they let the money grow. Day traders, they're active. They get in and out, right? Within a day, they can make 6,000, 7,000, 8,000, because they go in big and they come out big, but they also can lose big. So keep that in mind. Ask yourself, what kind of trader are you? How much risk can you tolerate? How much money can you see yourself down? Can you see yourself down 1,000? Can you see yourself down 100? Can you see yourself down $50? Right? It's all about you at that point. So that's basically how I'm setting up this play. If it rises and if it comes back above this 105 level, as you kind of see, it just bounced off of 105.264. If it comes back above this danger zone, this red zone here, I would get in this play. I would think this is a solid play, and I would ride it as far as it goes, right? So that's the end of my segment. I'm going to basically unlock the chat right now, and you guys can unmute yourselves. And if you have any questions, let me know. In that case, yeah, go for it. You have any questions, let me know. Is anything confusing? Is there anything you would like to speak about in a future webinar? Is there anything that you want to get a little deeper knowledge on, or if there's any direction that I could point you in, feel free. I hope I just allowed you guys to unmute. I think you could unmute. There we go. What's going on, Chandler?
Yeah, what's good, man?
You trying to get into Forex?
I mean, I just want to look at it real quick. I don't know if I'm gonna get into that shit like right now, but I just want to look at it.
Yeah.
See what you was gonna say about it.
It's pretty interesting. What I can say, the difference between this and stock and options, there's no PDT rule. So for the people who don't know what PDT is, that's pattern-based trading rule. It's a rule basically.
I know that shit got me.
Yeah, exactly. If you trading under $25,000 in your account, you can only day trade 3 times every 5 trading days. So please be careful. When you're trading Forex, you don't have to worry about PDT. There is no PDT rule. Even if you have under $25,000, you can still trade as many times in and out in one day as you possibly
But that shit, that all that pip and all that joint looks wild. It's wild. That's something like I wanted to hear what you want to say about it, but I ain't gonna get into that shit for a little while till I feel like I'm like real good with this swing trade shit first.
Yeah.
That shit, you lose wild bread messing with pip and you don't know what you're doing.
Yeah, exactly. You don't want to do that. I'll be 100% honest. You want to understand it before you get into it. Like I always tell people, don't just trade the hottest thing happening.
Facts.
Burn you, right? You got to understand the behavior. You got to understand how it moves, what moves it, right? If you don't understand that, you know, our president is sending our economy through loops. If you don't understand what Brexit is, if you don't understand the global economy, right? If you don't understand monetary policy, if you don't understand these concepts, you should not be trading Forex. I'll be 100% honest to you. Don't trade Forex because you may win a few times, but it's not winning. It's not about winning a few times. It's about winning over the overhaul, the long term, right? You want to stay profitable. You don't want to make a big move and win once and then lose 10 times after.
Yeah.
You know what I'm saying?
Somebody just wrote a message. I don't know how to see it. Oh wait, here it is. I think somebody writing messages asking you to talk about certain things.
Oh, bro.
Somebody named Joel just wrote something.
I didn't even know where the message is. Oh, hold on. Oh, I see it. Hold on, chat. Oh, got you. Can you explain a little bit about margin trading? I got you. So, all right, let me quickly break down what margin trading is. Margin trading, think about it as a loan, right? But interest rates aren't crazy. So what brokers do is brokers allow you, or they give you buying power, what we call buying power. Buying power allows you to make bigger purchases even though your actual account cannot. Let me give you an example. TD Ameritrade specifically, and I can also talk about MT4, MetaTrader 4. I know a lot of people use MetaTrader 4 to trade Forex. Basically, on TD Ameritrade, what they tell you is if you have, let's say, $2,000 in your account, they would 2x that. What does that mean? They will allow you to basically double your account and make purchases that is 2 times the amount that you actually have. So if I have $2,000 in my account, I can make $4,000 worth of purchases. That doesn't mean that they give me $2,000 into my account. No, that's not the case. They're just allowing me to make $4,000 worth of purchases. Now, a lot of people would think, whoa, what's the downfall? You know, nobody just gives out money for free. To be honest, it's not really a downfall. It all depends on your trading, right? So think about it this way. If you're trading with more money in a bigger position and you're losing, that means you're depleting your account faster than you normally would if you could only afford what your account could afford, right? So the brokers basically want you to deplete your account. That's, you know, they're making their money, right? At the end of the day, it's like a casino. It's like the house, right? The house is making money off of 2 things, and this is what I call trading a zero-sum game, right? The house is making money off of the transaction, right? So as you're trading, they're making money off of the commissions, the slippage, and they're making money when you lose, right? So if you trade bigger, if you trade with more money than you actually have in your account, they could drain your account faster. You know? So that's basically how margin trading works. Margin is a tool for you to be able to trade larger with a smaller account. He said, does a lot of investors, would margin trading be better on options? No. So you can actually only trade with cash on options. So it would actually be better for you to have a cash account. With cash accounts, the PDT rule doesn't apply. So if you're trading options with a cash account, you could trade as many times as your account can afford. If you have $10,000, you can make $10,000 of option trades within 1 day, right? And then the next day it clears and it replenishes. So knowing the accounts, knowing the loopholes, knowing your ways around it, you can definitely, it can definitely benefit you and allow you to trade larger, getting larger rewards with smaller accounts. And that's why I do the 3K challenges, right? Because I want to show people that you can make lots of money with smaller accounts. It just takes discipline and it just takes, it takes patience. What was our next question? Can you margin trading since? Yeah, so that's basically how margin trading works. Can you talk about risk management, especially with options? So options, when it comes to options and risk management, right? You already know how much you risk by the time you get into the trade. That's the joy of options. So when you buy an option contract, I'll show you guys the option. I'm gonna go to Apple. I'm gonna click on trade here. This is what we call our option trade. Okay. So these are all the different option contracts that you can purchase, right? Calls, puts, strike prices. Yeah. We'll get into more detail on that in a later date. Basically here, this is basically saying that for this contract, I'm paying $2.50. Each contract is equal to 100 shares. So that means I'm paying 250 cents per share. So 250 cents times 100, which is $250 for this one contract. Now, if I pay $250, my maximum loss is $250. It doesn't matter if that stock goes completely against me. It doesn't matter if Apple hits zero. The most I could lose is $250. Now, if I cut my loss before my maximum loss, let's say I cut my loss when I'm only down 25, then they will return me my $225, right? And keep $25 because that's my loss. So that's how options work. When it comes to stop losses and trailing stops, I am an option trader. I use mental stops. Once you become better as a trader, you kind of eliminate the stop loss. The stop loss is like training wheels. You use it because you literally can't control yourself. You literally can't depend on yourself to cut the loss. And that's okay. There's no problem in that. That's not a bad thing. So people use stop losses to basically automate their trading so they don't necessarily have to be in front of a computer 24/7. If the trade goes against them, they automatically get pulled out of the play, right? In swings from time to time, in options, I don't use stop losses, trailing stops at all. I cut my positions myself, right? But in stock equities, in Forex, hell yeah, I use stop losses because Forex especially is the most volatile market. Forex has huge swings. You would see the price going insane. It would move insane amounts of pips in small periods of time. And you don't want to get caught in a flash jump where, by any chance, they're very rare, but let's just say the currency jumps down 500 pips, right? It's gonna pass your stop loss and it's gonna go all the way down 500 pips, and then your stop loss is gonna trigger, giving you a 500 pip loss, even though your stop loss was all the way up here. So it's a lot of other things about Forex that, reasons why I rather options. But like I said, it's all personal preference. Whatever you make money at, stick with it, right? The point is to make money at the end of the day. So make your money, right? And other than that, use whatever you need to use to make your trading more comfortable, to make you you know, feel more safe trading. But other than that, I personally, I don't use stop losses or trailing stops on what you call it, on options. Other than that, is there any other questions? I think I went way over my 30-minute mark. Do you ever use indicators? I'm a price action warrior. The only indicator that I use is volume average. I like to see how much volume, how much people are looking at the chart. I like to see how much buying pressure is coming in. So as you can see, my charts are pretty bare. This is exactly how my charts look. You will see the VWAP if I'm day trading. So let's trade this, switch this here. These lines, this is my VWAP, because like I said, VWAP stands for volume weighted average. I like to see exactly how volume is basically affecting that specific security on that specific day, right? That's important to me. So between volume average and the VWAP, those are probably my only two indicators. But other than that, I am a price action warrior. For example, here, perfect play. You see as it tries to test the VWAP 3 times, the bottom VWAP, 1, 2, 3, couldn't break. What happens? It starts going to the upside for the rest of the day. Easy play, easy money. Basically getting in from 200 all the way up, riding this all the way up to 203. That would have been a nasty play, disgusting play, right? So that's basically how my eyes see it, put together with a whole bunch of candlestick patterns, chart patterns. Like I tell everyone, right? You sit the class, all of this would make sense. It's like speaking a language, right? Once you sit down and you get into this intensively, your eyes become adjusted to the charts, and you could see these from a mile away. You could see these from a mile away and say to yourself, this is a good opportunity. I'm getting in, and then you manage your position best way you possibly can. Any other questions? If anything, what I'm gonna do, guys, only because I've recorded this video and I want to post it, I don't want to make it far too long, then Facebook may not allow me to post it. Hit me through the DMs if you have any other questions. Contact me directly any possible way you can, and I will answer your questions. If anything, guys, I urge you, please, like, reserve your seat, sign up for the course, be a part of our group. I promise you, our members, we profit. We make a lot of money. We basically, everyone's building their confidence. They're learning different perspectives, different ways to trade. No one trades the same, so it's not like everyone is like just copying me or, you know, just doing what I do. They put their own spin to it, and they learn to walk on their own 2 feet by themselves, right? So I urge you, join, make the investment, educate yourself, sit our class, and let's make this money together. Let's grow this community to a point where we got a whole bunch of millionaires. We got a whole bunch of people, you know, bringing in 6 figures easy, you know, from their laptop, from their phone, whatever you want to call it. So let's create a second stream of income. You know, reach out to me. Let's talk about it, and let's see how far we can take this. Other than that, I thank everybody for coming to the webinar. Until the next one, I'll try to do this every here and there just so I can answer a lot of the questions that people ask. And then we basically take it from there, right? We'll bring this information to the community, and let's see if we can make a couple millionaires, right?